All right, guys, I hope you can see this. I just kind of stopped on the side of the road. I had to go pick up a... Nah, yeah, I did. Had to go pick something up. So I figured I'd stop on the side of the road here and check out the CDIO. That's the ticker that moved yesterday. It moved a lot. And today it looks like it, pre-market, post-market, pre-market, it did some moving as well. And then the first of the morning, as you can see here, first of the morning looks like it went up. It moved up, and then it kind of retraced down, and then it made for a move back up. Now, I actually got in around here. You know, maybe I should, maybe I shouldn't have. No. I wish I got in right there, okay? So I didn't get in right there. I wish I had got in right there, but instead I got in, I don't know, right here. And then I doubled down right there, and I knew that was a good entry. And then it dropped. I got out, consolidated, moved up. Gosh, got in too early. I knew it was looking good, but I got in too early. So let me take this off. Let's see what we've got here in terms of the move and why I decided to stay in. And the reason I decided to stay in, because we have this activity here. So remember I was telling you before about the moving average cross. So one, you do want to see the moving average. You want to see that that 15 underneath the 25, which we had. It just kind of got fairly low there, and then it made the move up, which is here. And so I was at a place here, and I only got 5 shares. So I was at a place where I could have broke even and then made a few cents, and I decided to hold. Of course, it flushed, and then it moved over, and then it did a cascade down, which this is where it took a lot of people out right here. So let's see what that looks like. Why that took so many people out. Yeah, volume increase there as it was moving down. What can you do? What can you do? Okay, so if I zoom out a little bit more, how could I have known that this place to exit, or this place to enter, was not as good as this place to enter? How could I have known? I like the fact that the volume average was lower, and that, let's see if I can get that out of here. All right, so the volume average was lower, and that the moving average was lower. We also got plenty of well, also got lots. I don't know why this is not giving me full screen, but this area down here did it again. This area down here shows that the range dropped. Range dropped. But I guess we were really looking for the range to drop down here. But why is this a better drop than this or this? I think what's significant here is this amount of gap. How much the price pulled below the 15 moving average, and how much 15 moving average pulled below the 25 moving average. See how big of a stretch that is there? So, and I think that's what we're looking for when we're looking for the sweep, when the large money comes and takes the small money, is here you're thinking that that's a good dip to get, and so you get this flush where the stock drops below the, well below the moving average. So this is a bit of a flush. But then this one compared to this one, this is even more of a flush. So this was a better flush. So why is that a better flush and something we should have been looking for as opposed to this one? And the only thing I can say is probably looking at the entire chart, I think you'd have to say that, I'm not getting the full chart here. I have to look at that. All right, but I think that what we're saying is that this guy here is about as far down as the 25 will drop below the 15 moving average before it decides to make its way back to it. So that's going to be our extreme case, okay? So I think we have to look for the extreme case, particularly not so much for a continuation, which is like boom, boom, boom. But if we're looking for a reversal, boom, then we have to look for that extreme, okay? And I believe that that's what I should have been waiting for since, and I've told you before that my particular trading strategy typically is looking for the stock to be over the 200 exponential moving average, over VWAP, and over, the 15 needs to drop below the 25 moving average and then move up from there. So we'll put over the 25 exponential moving average. So getting in the stock up to here would have been fine, but anything beyond that, I'm under VWAP, I'm under 200 moving average, I'm under the 25 moving average, so I shouldn't have been getting in here at all anyway. And maybe that's what I should take away from this as a learned lesson, as opposed to which one to enter. Enter here or enter here. Maybe I should be looking for sticking to my strategy, which is enter above here and above the 25. But you could say, well, Eric, even if you were going to get in at that other place, we got to keep in mind that if we were going to get in here, it's not over those things either. It only starts getting over when you get over here. Now it's over VWAP, over 200 moving average. It's over 25 and 15 exponential moving average at the close. So you might have got in here, put a stop in for there. That's a long stop though, right? And then look to exit up here. So that might have been a 1-to-1. But who really wants 1-to-1s? Who really wants 1-to-1s? Okay. But again, when you're trading in a somewhat of a sideways market, look, this is sideways. Okay? You start here, down, up. Looks like it's going back for some more down. This is a sideways market. Okay, it's not a straightly moving up market. Okay, so if you're trading in a sideways market, I don't think you can really expect to have exponential returns anyway. So, that being said, this does not fit my normal strategy that I really want to focus on. And I probably shouldn't have traded it anyway. But it's good to look at. It's good to look at to get some idea about how these things behave. And I also saw similar behavior in SQQQ when I was looking at it today. There was a drop below the 15 moving average. There was so much space, and then also with volume, a little bit of volume, and then from there it moved up. And then there was, another, well, it's kind of like this, but that's not a great example. And then there would have been a move up, but this particular strategy was more like a 1 to, was like a, it was a 1 to 1.5 risk to reward strategy, but then it was right about 75% of the time. All right, what happened with BRTX? Did I measure right or did I measure wrong? What happened? Oh, it went up. Okay, so I closed out of that. I made money on that. No, I lost money. I lost money. It was a flush. It flushed down. All right. Okay, so, and that was one that I got in on. Let's see, what could I have done differently here? Okay, I think the problem was I got in up here, looking for that kind of pullback there, seeing these potentials, thinking it was going to push up. And another something that I realized, even after putting this trade on and looking at some other charts, was this line here, this +2 standard deviation. That's telling me that from back here that the price was at least up there somewhere. And so if the price is up that high during pre-market, it's got to take a lot of activity in order to break above that. Another thing I've learned just looking through charts anyway is that unless the chart gets over the pre-market levels, then it's probably not going to get over the pre-market level. I'm just seeing that time and time again. Unless it's got a certain shape to it, certain amount of volume, it just very seldom gets over the pre-market activity. So let me show you what I mean by that. When we zoom out, you see this pre-market activity came up to here. What did it do? Came up there. I mean, it pushed up once, pushed up twice, pushed up 3 times, and then it just failed, right? So, like I said, unless it gets over that, you don't really want to enter anyway, okay? Came down, pushed up once again, failed, right? And so now you're stuck in a position that is failing for the day. But anyway, if we go back to CDIO, I think there was a similar type issue. So now it's showing you all my mess that I did. Yeah. Let's see. I mean, I'll show you what I did. Because like I said, this is just a learning experience, primarily for me. All right, so I got in up here. I was just getting in anxiously. I was looking for a shorter move, a continuation. I wasn't trading my actual strategy. And so I got in here. And then I became a little bit more patient. And here I saw that for this particular entry, I saw that there was a cross below for the moving average. There was a cross below for the volume, and even the trading range dipped down. So I said, definitely got a potential to move up. Well, it didn't. It moved down. Okay, it just continued to widen that that moving average gap on that next pull. But then everything still kind of stayed in this subpar range, so it looked good. And so I bought again. It did a push up and then a flush down. Like I said, I wasn't convinced that it was giving up, but it did. It gave up right there. Okay. Gave up right in there. Well, I gave up right in there. And then this stock actually just moved up. It moved up to where I wanted it to be. I was planning to get out right around this level before, or when it tried to retest. When it tried to retest this, I was going to get out there. So that's in that 822 mark. And it got up to 825, 829. Okay, so if I had held on, I would have taken my profit. But if I'd have held on, I would not have been sticking to my risk to reward my strategy, which I technically wasn't sticking to my strategy anyway, because I was getting into a stock that was not above the 200 volume weighted average price, and made made crosses for the volume and moving average when doing a slight retracement. So anyway, that's all I have on CDIO today. I will check with you tomorrow. I'm Eric. Peace.